things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
Take away the weekly.
Trace back down to what we've got. And then that price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone. What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs in pretty steady uptrend, making these higher highs and higher.
Mostly trend following.
The stimulus in a certain way.
Well, hello everybody, and welcome back to another stream. Today I am joined by a very special guest. I'm joined here with Gareth Soloway from InTheMoneyStocks.com. Gareth, how you doing, man?
Hey, I'm doing really, really well. Thank you so much for having me today.
You're very welcome. I'm excited that you're here. I didn't mention before we jumped into this, but my dad and I are actually fans of your stuff. We've been watching you for a while. He's been a member with you for a while as well. So big fans and super excited that you're here on the show with us. And honestly, just in the nick of time, because we got some crazy stuff going on in the world of markets right now. So maybe you can help us understand a little bit of this volatility that we're seeing.
Yeah, sure. So today we're definitely seeing a big market sell-off across the board. It seems to be triggered by the continued decline in yield. So if you saw the 10-year yield today down again pretty sharply. Now it is bouncing back off of the lows from the morning session, which is giving the markets a little bit of a minor dip. But the markets don't like volatility, right? So they don't mind if the yield goes up 0.1% a day for 30 days straight, or down a tiny bit a day every day. But it's when you get these big moves in the yield that the market and market participants start to worry that there's something bigger that they're missing. And that's what the concern is today. And you're seeing the markets again selling off on the worry that, what's this telling us? Is the economy going to really shrink? Is the Delta variant going to be way worse than anticipated? All those type of things.
Sure. Yeah. And that was kind of the thing I was pointing out today. I had a live stream earlier today, and it seems like it's inflation plus the COVID fears that are back in full force, which it was kind of weird because the whole thing with inflation is it's been a topic for the last few weeks, and then all of a sudden it just became like a way bigger deal. It's so weird how markets will do that occasionally. But yeah, I am interested in hearing your thoughts on a couple different markets today. We do have your screen here, so we can change it to that view. Do you want to look at, is there any main markets here you want to start with? You want to start with the S&P? What do you think?
Yeah. Let's take a look at the S&P because there could be something in the works here that's very important. So I've been tracking this kind of declining channel where the lines are getting closer and closer together. And you can see generally, here's your low from 2020. So this is the COVID panic low. And if you draw a trend line, which basically kisses this level, connects here, 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 you can see one time right over here, we closed just below that line. And I look for something called confirmation, which is a secondary move the day after, where if you get that secondary down move, it's called confirmation. It confirms a breakdown. And as you can see here, we did not do that. Instead, we traded right back in that range. You didn't get confirmation. You then tagged it here. The big deal about the last two trading days, Friday and today, we closed below that line. And today we're lower again, which could be the confirming signal I'm looking for a bigger market decline. So I am on alert here. I have accumulated shorts over the last, few months here in the market as we've been kind of going sideways to up, adding to positions, getting my averages in the range where we currently are. And the idea here is when we get this trend line break, it's such a major trend line from 2020, the lows of 2020, that we should get maybe upwards of a 10% correction in the S&P.
Wow. Yeah. And that leaves plenty of downside there on the table, because I think we're only down a couple percent right now. But I do like that point that you made, just the fact that, that upward trajectory there with the trend line, you've got sort of a falling out there for the first time in quite a while. What do you think with the S&P, if it does dip further, where do you think it finds support? Do you think it finds demand somewhere? Do you think it's nowhere near where we currently sit?
Yeah, so I mean, what I like to do is just throw on the moving averages real quick, and this is the 200 moving average down here. So this would kind of be my first general target, which is currently at 388.50 or so. So you're looking at another $30 move down or so on the SPY, which would almost get us to that 10% decline overall on the spiders. If we do decline further and it turns out to be a much bigger correction, the obvious major support would be the pivot high just before the COVID collapse, which would be down here at 340. And that would be, definitely at the 200, I'd start to nibble on some longs for a swing trade bounce. But down here at this 340 area, I would definitely, if we shot all the way down there, I would for sure be looking for technical bounces there.
Sure. And when you say looking for technical bounces, are you more of, for the people who don't know you, I'm a little bit more familiar with your style. Are you more of a swing trader, day trader? Do you do a mix of both? You mentioned that you had accumulated some shorts. Is that more of like a short-term concept, or are you looking more at a bigger retracement here?
Yeah, so I do both swing trading and day trading. So the day trading is just intraday scalping. We did 3 trades today in the chat room that I run. We're in and out relatively quickly within minutes or maybe an hour at most. But overall, the bigger moves when I'm looking at this daily chart is going to be more for swing trading, which is holding for days, weeks, maybe a month or two. But that's generally the time frame. You're looking for the moves where you hit a high and you correct really quickly. You grab that money before the bounce. Sometimes you go long for the bounce. And it's much more short-term trading in terms of just getting in and out over the course of days and weeks.
Sure. So a little bit of a mix of both there. Yeah, that makes a lot of sense. I think, with everything coming from the Fed, I know that you follow the Fed pretty closely. I would love to hear a little bit more from you on that. Like, do you think that tapering and all those concepts are way off as they have been mentioning? What's your stance on the Fed? Do you think they're going to try and step in and prop the markets up? Do you have any say on that or opinion on that?
Yeah, so the Fed to me is making, and again, I do believe that the Fed will be the biggest villain in the room when we look back in 20 years or so. They've been the entity that every time the market or the economy has a cycle decline or a recession, they're the ones that come out of the woodwork and try to prop the economy up and get it back into growth as fast as possible. Now, in theory, that's a nice thing, right? They're trying to help people in the short term, retain jobs, get jobs again, get the economy back on its feet. But the problem is that a normal market, whether it's a market for the economy or any other market, it needs to go through booms and bust cycles. Now, when it's a normal market, it goes through declines that are not so fun, but they're not horrendous. The more the Fed interacts and basically jumps in and saves the day and lowers interest rates, and they end up creating a bubble that's even bigger. So that means that the next time the collapse happens, it's even worse. And then the Fed has to step in again even more. And we've seen that, right? If you look at 2009, 2008, they came in and they did so much stimulus. They haven't even stopped doing stimulus since that point. And we've now created this massive bubble in housing, this massive bubble in stocks, cryptocurrencies, meme stocks. You could go on and on, the bubbles that are created because of the massive liquidity influx into the system. And I do worry that we'll look back in 20 years and say, these guys are one of the reasons why we've had the biggest collapses and destruction of capital in history when all is said and done. And again, just to go into the transitory, they keep on saying, oh, the inflation is transitory, it's going to go away. I don't believe that. All right. And they've even started to admit it. Janet Yellen recently, who's not part of the Fed anymore, but Jerome Powell came out and said, inflation's worse than we anticipated. It's heavier than we anticipated. They still say, oh, it's going to be transitory, but you could see them moving the goalposts here. And I think that, you just naturally, with lumber up as much as it went up, you were going to see massive inflation. But my fear is that you're not going to see a pullback of inflation to 2%. It's going to pull back, but it's going to be like 4%. And that's going to mean that the Fed supposedly is going to have to tighten interest rates. And then obviously the market won't like that.
Right, because you had CPI numbers come out 3 months in a row. For those of you guys who are watching, we had higher than expected, higher than forecasted inflation numbers for 3 consecutive months, which was much scarier than 3 months ago. They were still talking about, oh, we're going to have some transitory inflation. Don't be alarmed by it. And then it's like, okay, well, every time that happens and you get higher than forecasted numbers, it loses its effect, basically down talking from the Fed. So Gareth, I'd love to hear your thoughts on the dollar in response to that. Do you think that the dollar is weak? Do you think, or should be weaker? I mean, today we do see the dollar really strong. We're seeing a lot of money into the dollar. So maybe we can talk a little bit about that and get your thoughts there.
Yeah, so here's the UUP chart, which is kind of the ETF that tracks the dollar. And you can see that, we've had dips and then it strengthens. We've had dips and then it strengthens again. And we're in kind of one of those strengthening phases. I think for me, these interim moves in the dollar where capital and investors get scared and then they run into the dollar because it's still the reserve currency of the world and still the safest currency to be in. That's what we're seeing here in recent days. You've seen that accumulation and in recent weeks. My bigger outlook for the dollar is that eventually the dollar will continue its longer term decline, and then you're just going to see it continue to grind lower. And that's not to say it won't have bounces along the way like what we're seeing here, but inevitably when you print this amount of money, it's in the long term, there's no way for the currency to still hold its traction. The only positive for the dollar is that every other major, industrialized country is printing just as much. So that's the positive. I think the downfall of the dollar is actually going to come from China, where the digital yuan is being pushed in China. If you talk to people in China, they'll tell you everything is about the digital yuan, which is also why they're restricting Bitcoin, right? So they want to get rid of Bitcoin because it's a competitor to the digital yuan becoming the reserve currency of the world. And that's really China's plan here. China's plan is to make the digital yuan the new reserve currency, which will inevitably continue the decline in the dollar as other countries stop holding as many dollars in reserve because it's the reserve currency. So short term, again, you're getting these little bounces, people get scared and so forth. But if you look at, 1 year out, 5 years out, 10 years out, I do expect the dollar to continue its decline.
Right. And I would tend to agree with you on that for sure. I think, with the Fed trying to prop everything up, I guess one strong suit that you have for it right now, short term, is that it does seem like right now we have a little bit of a risk off sentiment due to, like we talked about with the stock market coming down a little bit of fear around the Delta variant, et cetera. You might get a little bit of a bid for the dollar for now. But yeah, I was just interested to see your thoughts there. You've got gold pulled up, definitely a hot topic for our viewers here on the channel. So guys, we're going to take a look here at gold. What do you think, Gareth? What's your thoughts on the gold market in response to the dollar, in response to inflation, the Fed? What do you think?
So one thing that's interesting is the dollar's strong today, but you're basically seeing a flat day on gold. And that again speaks to, people saying, okay, the markets, you're seeing a de-risking in the stock market. So people are going to generally buy things like the dollar and gold at the same time. I'm overall very bullish on gold here going forward. You have an inverse head and shoulders here formation. You haven't broken it yet, so it hasn't triggered, but this would be your neckline. When you get above this, you should get a measured move of approximately $20 on the GLD. So you'd be looking at around 200 on the GLD once that break point occurs. And the thought process here is kind of partially the aspect of the printing of money. So, just like I think the dollar is going to be weaker over the longer term, the same thing goes for gold in terms of being stronger, where you should see the more dollars that are printed, gold should react in a positive manner to the upside. So again, these short interim moves, you never know for sure. You could see you're kind of stuck in a little bit of a trading bullish range here, but eventually I do think the gold chart breaks out and then makes a bigger move to the upside.
Yeah, and I think you have a couple catalysts there. I mean, gold tends to slightly outperform, at least from my experience and studies. It tends to outperform the S&P during the fearful down times. I mean, back in 2020, I don't know if you had looked at gold. I'm sure that you had, but it dropped with the stock market, but recovered like a month and a half later. And then the stock market, it did recover very quickly, but it still took much longer than gold did. I mean, you can hardly see that dip, right?
Yeah. Yeah, and you're right. It absolutely. So that's the interesting thing. Everyone should always remember that during periods of mass panic, people don't say, well, gold is gold and stocks are this. They just sell everything, right? So we saw Bitcoin back then falling, gold falling, and the stock market falling. But you did see, like you're saying, an absolute quick recovery, and then gold actually ended up making higher highs and moving up to new all-time highs at that point. And I think that's kind of the same situation. Is you might see these shorter-term big sell-offs if there's fear and panic, but ultimately gold is going to be a place where money goes, especially smart money, big money, institutional money, because they know that more fear and panic in the economy means more Fed printing of money. The government's going to stimulate more, which is more printing of money. And we all know that then gold is going to benefit from that.
Right, which is interesting enough because even today, when looking at the gold market, it came down hard early on in the day, but you can already see, like you were pointing out, it's like sort of flat. It's recovering very quickly. So maybe even a trade idea there for the swing traders out there is to keep that in an open mind to that, because like if you do have a big risk off move, you have a big fear, like you said, everything gets sold, everything gets thrown out the window. But maybe that's where, okay, well, if that's the environment we're in, gold is poised to do another one of those outperforming streaks. So I do like that idea. And I think it's an interesting point, especially with the dollar being printed so high with inflation's concern. Gold is not really near its all-time highs. So it may have plenty of upside potential relative to like if you were to buy the stock market today. So
yeah, and I think investors oftentimes they're always looking to make a lot of money really quickly, but in certain types of market environments, preservation of capital is important. So, if you're looking at a market that could decline 5, 10, 15%, maybe gold only goes up 3 or 4% in that period. But if you were in stocks, you'd be down 15%. Instead, you're up 3 or 4%. And that's a huge gain then when you look at that in perspective.
Exactly. And just understanding that, there are times to go for yield and there are times to go for, like you said, preservation. And that is really sort of the name of the game right now. Is it's just a question of whether or not this COVID thing, ruins all the beach trips for the year, or if it's just another, bump in the road. I would say the one sort of bullish catalyst that I can see, and you might agree or disagree with this, for me is that, okay, we've sort of built up infrastructure. We have vaccines rolled out. We have a lot of, redirected focus on fighting the pandemic stuff. So I wonder if the recovery in this case, if it does dip, would be as extreme as before, if it were to get, serious, or if it would just be a quicker dip than even last time.
Yeah, I agree 100%. I don't think it would be that big of a dip. So one of the things that happens to the market is it adapts very quickly. So when COVID hit, it was a shock, right? It was that black swan event. Now we're all kind of used to it. We're like, okay, here we go again. Plus you have a good chunk of the US population vaccinated, which means, maybe we'll get sick, those of us that got vaccinated, but it may not be that bad. So you definitely have this thing where I don't think that's the cause. Like I'm not looking at the Delta variant and saying, oh, we're going to drop 10 or 15% on that. To me, there's something else lurking there, whether it's, higher inflation that spooks the market, yields dropping, but you see the higher inflation, these type of things. And again, I'm not actually sure how to read the yields right now. I'm not sure if there's a deleveraging event going on there with the yields where too many people got long yields and now it has to kind of flush out before it resumes its uptrend. But these are the types of things that I think more than anything, the yield action is kind of worrying the markets more than the Delta variant.
True. Yeah. And it truthfully, I mean, they had that Fed meeting the other week where it was just like, hey, we're a ways off from where we want to be. It may just truly be a couple different factors contributing to an overall just pullback after this incredible screaming uptrend that we've seen in stocks and a lot of different markets around the world. I would be interested, earlier you mentioned talking about the Chinese cryptocurrency. If you want to just explain a little bit about what that is and then also relate it to your thoughts on Bitcoin, that would be awesome, because I know a lot of people here probably care about Bitcoin. So if you can share anything on that, that would be awesome.
Yeah, absolutely. So let's take a look at Bitcoin's chart here. So basically, China has been one of the key reasons why Bitcoin has been argued that Bitcoin has fallen apart and come back down to this 30,000, 31,000 level where it's currently sitting. And China basically it knows the future. And this is just showing how China is always ahead of the game and the Fed is always lagging, right? So China has already launched its digital currency, the digital yuan, while the Federal Reserve just started saying we're going to look into it, right? And the future is digital currencies, right? It's just the nature of the beast. It's the transactions can be done much faster, much cheaper. So that's the direction everything's going. And that's why, again, China's saying, okay, well, we want to be the biggest gorilla in the room. We want to be the superpower. We need a digital currency. We don't want Bitcoin messing with that, at least here in the short term. We want to establish the digital yuan as that biggest cryptocurrency in the world. So you're seeing that type of event unfolding. And then you have Bitcoin here, which has fallen. And I still think Bitcoin has further downside, right? So basically, you can clearly see on the chart here that you just continue to hammer on this 30,000 level. Now, you haven't had a daily close below 30,000. Once that happens, I do think you see another deleveraging event that takes you all the way down to this level here, right around 20,000 to 18,000. That's where I'm going to start to nibble a little bit. Now, again, people would say, wow, that's such a massive fall, 65,000 to 20 or 18,000. But in reality, it's basically just going back to where we were in 2017 at the highs. And on a technical basis, that should be significant support. So I do think further downside in Bitcoin. One little note on the stock market as well as cryptocurrency is that, we're just starting to see some of these large caps downtick over the last couple trading sessions, but deleveraging has actually started in the markets. You saw it in Bitcoin, Dogecoin, Ether. You then saw it in meme stocks like AMC's way off the highs, GameStop's. So the deleveraging is already beginning in the market, and I think that's going to continue. One of the things people should realize is that one of the reasons why I've been bearish on the market for the last month or so is that you have so much leverage in the system, right? So people are taking 100 times margin on cryptocurrencies. Their investment accounts and stocks are leveraged, as much as they possibly can. And that creates way too many longs. And as a market comes in, even if a market just drops 5%, there's going to be a portion that get margin calls and they're going to have to sell more. And then that down move creates more margin calls. And that's how a deleveraging event occurs. And I really do think that that's going to be potentially one of the reasons why the stock market comes in here.
Absolutely, and I think your points about Bitcoin are very interesting. The fact that now the Fed is discussing this concept, and then you have the Chinese who, like you mentioned, are ahead of the game on this. What do you think? I mean, so where does that leave Bitcoin in the middle of those two? If you have two of the world powers talking about making their own cryptocurrency or at least digital currency, do you think that is a long-term bearish catalyst for Bitcoin? Do you think it has, potential to do another one of those 2-year down recessions like we saw in 2017? And do you think it really has any chance of killing the validity entirely? That's one thing that I've heard a lot of recently. And I personally, I hold some Bitcoin, so I'm not really, bearish on it. But my thought is just, short term, that's a lot of fear built up around something that was, just a few months ago, everybody in the neighborhood was like, hey, go buy some Bitcoin. It's going to $1 million, So what are your thoughts there?
Yeah. So the number one is anytime you hear, and I heard this like crazy. I mean, my UPS driver who was delivering Amazon packages to me, he'd be like, oh, I bought Dogecoin at this. And like once everyone's telling you to buy it, it usually is close to the top. And certainly we've seen a big correction in all the cryptocurrencies. I think that, so long-term, number one is I'm very bullish on Bitcoin. Bitcoin to me isn't a currency as much as a digital gold to me. So that's why I'm not so concerned about China in the long term. So when you look at Bitcoin, for me, again, it's like, all right, how do I get away from the ability for governments to print money, right? I mean, that's one of the reasons why I like gold, one of the reasons why I like cryptocurrency. And the answer is Bitcoin only has a maximum of 21 million Bitcoins that can be mined. So that gives you a finite amount that can be in circulation. When you look at the digital yuan, China's basically just trying to establish themselves as the reserve currency of the world, not the digital gold, if you will. So I do think that both Bitcoin and the digital yuan can coexist. The reason why you wouldn't trust the digital yuan as a gold type thing is because the government can print it just the same. So, I mean, that's one of the kickers of why I wouldn't necessarily think that a Federal Reserve backed cryptocurrency would be that big of a thing as well, is because if you're looking for the reason, so it's important to define your reason for wanting to hold cryptocurrency. For me, it's that finite supply where it can't be printed. And anything from the Chinese government or the central bank here in the US, they're going to have that ability to print as much as you want. So you're not going to get that reason. And therefore, again, I do think that long term, you're looking at 100K on Bitcoin, maybe 500K, definitely upside.
Right. Yeah, no, and I really like that point that you made. The fact that, the original idea with Bitcoin by the original creator was that you can only make a finite amount of this stuff and nobody has total control like a central government. So I think that is interesting that China is stepping into the realm. I think that could create just my opinion, long term, this could be, like you said, a great opportunity to look at Bitcoin more seriously and say, yes, they could coexist. Yes, it is kind of more a decentralized digital gold than anything else. So I really like that thought, and makes me feel a little bit better about my Bitcoin, which has been down for a while. But I've owned it for quite some time. I bought some. I think maybe around like 6,000 or 7,000, 8,000. So I've had it for a while. So I'm
a good entry.
A little bit of a dip.
That's a great entry. And I think, and just keep in mind is like, I mean, the chart right now is vulnerable to a breakdown, but it's just a short term. Like if you're holding it for 5-10 years out, that's not an issue. I even think that we could go into kind of what they call a crypto winter, which is like what we had after 2017, where you see 2 years of kind of sideways to down movement. But either way, I mean, look at how it emerged from that. I mean, if you were smart enough to buy anything under, like, let's say 10,000 after it went to 19 and change, I mean, you're a genius when it was at 65 and you're still looking great. So again, think about why you're doing it. For me, I do hold some Bitcoin. I swing trade Bitcoin, but Bitcoin and gold, I have like core positions that I look at as insurance policies, right? So
Sure.
I always want to have those because I don't want to wake up one morning to a dollar collapse, right? Where all my assets are just decimated because of that. And I look at those as like, just like I buy health insurance and life insurance to protect myself in the event of a catastrophic issue, you want to have a little bit of those to protect against a dollar collapse as well.
Yeah, and I like that a lot. The one thing I will say that was interesting to me was, I don't know if you ever heard this, but Kevin O'Leary, the super popular investor, he had actually talked about openly saying, like, I'm just going to dedicate a portion of my wealth to Bitcoin, which was a big deal because a lot of people have always done that with gold. It's always like put 1% or 2% or 5% of your money into physical gold or ETFs at the very least, as sort of that hedge or sort of diversified view. And to hear more and more people and some companies getting hold of some Bitcoin as part of just a diversification aspect is really, really cool. And probably one of the most, in my opinion, most bullish things, because if you just had hedge funds around the world, big companies around the world just take 1% of their money, if a bunch of different, central things did that, that's a huge catalyst for Bitcoin. So as the dips here could be really bullish. I don't know. Yeah.
And it's funny because it was something that I was pondering as well. And I talked to Michael Saylor, the CEO of MicroStrategy recently, and I asked him this as well. And I said, we all know he's buying with MicroStrategy like 2-3 billion in Bitcoin. He probably will buy more. And I asked him, I said, have you had your team like analyze if every pension fund, every hedge, like if all these major entities bought just put 5% of their assets in Bitcoin, what would the price of Bitcoin potentially be? And I honestly haven't done the math on that. I don't know, you probably need a team to do that. But it would be an interesting thing to figure out where that could be if it does become like the digital gold and people hold 5% of their net worth in it.
Sure. And I think it's just kind of cool because right now we see the dollar rising as inflation rises, yet we see crypto, which is a deflationary by nature exchange, right? It is actually falling. So to me, it's interesting because you have this situation where you could buy something that they only create X figure amount, 21 million, and then over time, as more dollars get printed, you have something that is degrading over time versus something that is theoretically should appreciate over time. So to me, Bitcoin is an easier grab, in my personal opinion, due to the fact also that when I look at Bitcoin, let's say I bought a full coin right now, about 33,000, 31,000, whatever it's at. And I say, okay, I'm going to hold this for 10 years. You might have the worst case scenario and it goes to zero. That would be awful, but it could happen. You lose 33,000. If it triples, if it quadruples, it 10x's, right? You're talking about a massive risk to reward when looking at these things as potential investments. So to me, I kind of like that. I said the same thing with Tesla about a year ago, and it worked out quite well. So I bought, that's probably my best trade ever, is just buying Tesla with the idea that, if JP Morgan slaps on a $0 price target, maybe they have an agenda. So I ended up buying a little bit of Tesla, and that worked out really, really well. So looking for those opportunities is, in my opinion, some of the better ways to look to invest if you're willing to take a little bit extra risk. What do you think?
Yeah, I think that is smart. I agree. I mean, I think again, even if it were to drop a little bit, and I don't honestly think it's going to go to zero ever. I don't think the government will ever outlaw it here in the U.S., mainly because there's too much adoption with big money now. Even at this point, it would be very hard for them to do it. Now, a lot of people talk about restrictions and kind of regulating it. I actually view that as a positive. You don't want, the more something is used for illegal purposes or whatnot, that creates kind of a cloud where pension funds, like we talked about, and bigger players aren't going to mess around with it. The more it gets regulated, the more likely a lot of these funds will start investing in it. So I actually, a lot of people are like, oh, there's more regulation, we don't want that. In a weird way, I kind of do want that because I think it clears the path for further upside. The other thing I'd say too is, just a warning to people. the way cryptocurrencies, and I'm talking about, I mean, there's thousands of cryptocurrencies these days, right? Just keep in mind that it's very reminiscent of the .coms. So be aware, like for me, I invest in Ethereum, Bitcoin, and a few of the other top ones, but I don't really mess around with a lot of the smaller ones because I traded through the .coms and I saw plenty of .coms just go out of business left and right. And I do think you'll see a washout at some point where, the best of breed will survive and gain and be the powerhouses of the future. But then a lot of them will go out of business and be worthless at some point.
Right. I think you're right. I think that at some point, whether it's now or later, there will be a stress test across the board when it comes to cryptocurrency. Because, at the end of the day, I even heard Jerome Powell when he was speaking, I don't know if it was last week or something, he had mentioned something about cryptocurrency and how, they weren't afraid to do the regulation process. And I literally look over at the chart and we see, we're sitting in the office, we see the price start to dip. It's like, that definitely has the potential to have some ugly days. And when that does happen, it's already kind of been in ugly days, but for the people who are newer to crypto, trust me, it can get way worse. So, and that's okay. Part of the longer term vision is if you look at cryptocurrency over time, it's done those incredible dips and come roaring back. And, that's what comes with the territory. If you're going to talk about something that can 10 times itself, you have to be ready for serious dips at times as well. And maybe even
100%.
look to take calculated risks with that,
Right. And that's why you have to, you have to be, when you go into any asset that can go up 10 times, like you're saying, you have to realize it can drop 50, 60, 70% as well. And so you don't want to commit money where you're going to freak out when it's down 70% and then exit. Like if you have your long-term thesis and that still is intact, then you just got to invest a small enough amount where you can weather those storms.
Absolutely. Well, awesome, Gareth. I think that's pretty much everything we've got to talk about today. I feel much more intelligent after speaking to you. That was very helpful.
I appreciate that.
Yeah. Gareth, where can people find you? I obviously know I've been watching for a while, but where can other people follow along with you if they want to hear more of your thoughts in the future?
The easiest way is just follow me on Twitter at Gareth Soloway. So at my first name, last name. That's kind of where I post charts here and there, a little bit of tidbit on like market analysis and comments and different things like that. That's the free way. And then if you like what you see there, I encourage you to come to inthemoneystocks.com and check out the service I run where I give out my exact swing trades, my buys, my sells, all of that kind of information as well.
Absolutely. Well, guys, definitely check out Gareth. Again, he's got a wealth of knowledge. He's been in the game a lot longer than I have. So big thank you to Gareth for coming on the show. And maybe we'll see you around next time.
Absolutely. Look forward to coming back. And thank you so much for today.
All right, Gareth. See you later. All right, guys. So with that said, that is going to wrap up the stream here today. Like I said, hanging out with Gareth was awesome. Just getting his thoughts on some of these markets. Really loved what he had to say about the dollar and what he had to say about the cryptocurrency markets. Definitely very, very insightful. So if you did enjoy that, make sure to hit the like button down below on the stream, subscribe here, and also go check him out on Twitter. Give him a big thank you for coming on the show. That was really cool just to have him. I'm looking him up on Gareth Soloway. I'm going to try and link him in the chat here so you can guys go check him out. There it is in the chat. Go grab that link if you want. You can follow him on Twitter for free. He's got a bunch of stuff there for you to check out. So with that said, guys, thank you so much for coming on to the show. Hope you have a great rest of your day, and we will see you back in the next one.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.